Hey, how's everyone doing? I'll be with you. Excuse me. I'll be with you shortly. Just let me know how the audio is coming in for you folks. Just let me run through a few more things, and I'll be with you guys real soon. Thanks. Okay, we'll be starting up soon. Pablo Pina, how you doing? Seymour Rivers, how you doing? I guess we'll go ahead and we'll be starting up. Glad you guys could make it, and hope everyone had a great weekend. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. This is our weekly live stream, and we thank you all for being here. Again, hope you all had a great weekend. It's a pretty tame weekend, wasn't it? I'm sure you folks had a pretty mild weekend. Nothing much went on during the weekend, so let's all go a bit easy, find some peace in all of this. But again, glad y'all could be here. Again, Seymour Rivers, Theta One, thank you for being here. Robert, Sharantano, first time I've seen you here. Welcome aboard. If it's your first time here, go ahead and type in new and where you are from, and we'll see if we can acknowledge you. So again, thanks for being here. BK Travelog, always be funding. How you doing? James Richter, Victor, Claudio, here. Thanks for the thumbs up. The Mick, how you doing? Aloha. How you doing there? In Montana, evening. How are you doing? Anna Maxa, good to see you again. Frank Me, silver ready to launch. It's been on the move for sure. Both silver and gold have been on the move. We'll take a look at that also. Pudenda Johnson, how you doing? Okay, Rolf Steiner, Jocko John, SoCal, USA, how you doing? Let's see. Well, that didn't take too long for politics to get started. Rolf Steiner, okay, how you doing? Max Strong, Gary Downs, how you doing? Captain Ron Hayward, I'm here in the middle of a hurricane in the Florida Keys on a boat watching your broadcast. Well, let's hope my mug isn't the last thing that you see. Let's hope your boat stays afloat and everything goes well for you, Captain Ron Hayward. Amazing. Okay, so we'll go ahead and get started. As always, if it's your first time here or you haven't already done so, give us a thumbs up. Let us know if we're doing good for you folks. We really do appreciate these thumbs up. And don't forget to subscribe and hit the bell to be notified on new updates as we move forward. And you can always find us on social media. Silverbullion.com.sg is our website. We do sell gold and silver here in Singapore, which is where we are located, but we're also a company that deals with systemic wealth protection. So again, as always, if you absolutely can see what's going on in the world, you know what's going on in the world, and you feel a bit uneasy, um, and you know that fiat currencies do have an expiration date and all of these things, come and talk to us. We do have programs to help with systemic wealth protection. We're in your corner definitely when it comes to these things. Silver Bullion SG is our Facebook handle. Silver Bullion PL is our Twitter handle. Audio versions bit.ly, bit.ly, SBTV iTunes, SBTV Spotify, and again, as always, do join our Crisis Tracker group. Again, this is where we sift through a lot of things, and we'll put up financial news, economic news, things with gold and silver. We'll put it up there for you. and we kind of help you sift through the weeds with that. It's a growing group, so we hope you will join it. So again, thank you all for being here. A little bit more roll call. Hostel of Carcosa, how you doing? Eric Harmon, New and Texas, welcome aboard. Welcome aboard, Eric. Glad you could be here. Huitron, Toronto, glad you could be here. Also, first time I've seen you. Welcome aboard. B Dog, New California. Yes, first time I've seen your name. Welcome aboard. Appreciate the new guys and definitely appreciate the older guys too. And one thing I can't stress enough with this channel is there are a lot of people out there on the fence when it comes to gold and silver, and your comments matter. So what you say out there really makes a difference for people who are trying to understand why you and I we understand gold and silver, why we buy gold and silver. So again, always keep that in mind. You can really help people out there and help them make decisions when it comes to things like gold and silver, and that's another reason why we appreciate you being here. Lionel Weatherspoon, PA, how you doing? Welcome aboard. Let's see. Carrie Ellen Welder. Okay, yes. Your reprieve from election pundits. Yes, I am not an election pundit. That is for sure. Peter Schultz. Schultz, how you doing? New Columbus, Ohio. Glad you could make it aboard. Again, a lot of new faces. Really do appreciate it. Thank you all for being here again. An old face is going to be our upcoming guest. He always has some interesting things to say, and this guy, he is not going to look like he does in this picture anymore, that's for sure. Our upcoming guest is going to be Dr. Mark Faber. He's going to be joining us again, the publisher and editor of the Gloom, Boom, and Doom Report, which highlights unusual investment opportunities, and he's well known for his contrarian investment approach. He's well known for a lot more than that. One of the most colorful guys you're going to meet, colorful character. He will tell you things straight, and that's one of the things that we appreciate is when guys can put all feelings, all emotions aside, cut through the chase, and just let us know how things are. We're adults, we'll work our way through it. So Dr. Mark Faber will be coming up. He'll be the next guest, that's for sure. Can't wait. So let's get to our ebook game where we thank you again for being here, and as in so we give away ebooks, and this time around we're going to give away the same book as last week. We do find that a lot of people do seem to like Rickard's books, and especially things like Aftermath and Currency War, so we're going to be giving it away again. This book in particular, Currency Wars, Making of the Next Global Crisis. In 71, as most of us know, Nixon imposed the national price controls, took the U.S. off the gold standard in a pretty extreme measure intended to end an ongoing currency war that had destroyed faith in the U.S. dollar. And today, we are engaged in a new currency war, much more than currency wars. And this time, the consequences will be far worse than those that confronted Nixon. So it's going to be it's a great book. You know, I've had the pleasure to read it, and it's a very eye opening book. So if you want to win it, some house rules: download the Kindle app from your phone or tablet's app store. It is a free app to download. Be the first to correctly in this live stream answer the question before the timer runs out. It's about a minute 30 or so. U.S. winners will be given a link to download the ebook, and winners outside the U.S. will be offered an alternative prize at our discretion. And you're going to have to provide us with an email during this live stream. And what we'll do is we will mute your comments so that way only we can see it, and that way we'll be able to get your emails. So having said that, the question is going to come from last week's Rick Rule interview, which I'm glad looks like a lot of you had a chance to see. So here's the question, and my colleague Vincent, get ready because we got some smart guys here. I think they're going to answer this one pretty quick. It's a little bit of a trick question, but here you go. According to Rick Rule, the biggest risk to owning precious metals is, okay, according to Rick Rule, the biggest risk to owning precious metals is, and think it through. It's Not exactly a straightforward question, but you guys will get it. I know you guys will get it. Okay, the biggest risk to owning precious metals is think it through, think it through. Okay, so here we go. Yes, Rick Rule is a legend for sure. For sure. Okay, we got one answer from Rusty Shackelford. Okay, see what other answers come in. Okay, not owning them, theft, not owning any, confiscation. Let's see what else is out there. Um, Hang on. Oh, you guys are answering this one pretty quick. Okay, Peter Schultz, theft. Hang on, I'm just trying to go through this real quick. Confiscation is another answer. Let's see. Not owning them again. Okay. Let's see. Okay, there you go. Timer is up. So let me check who we go down to. Let's see. Actually, a bunch of you got it right. The answer was not owning any precious metals. So it looks like we're going to go down to Anthony Olfig, who answered that correct as well. And here's Rick Rule with the answer.
The first thing with regards to owning physical precious metals is I would suggest that the greater risk is not owning any.
Okay, so there you go. The greater risk is not owning any. So let me just go through this real quick and see where we're at, so we can give a call out for you guys to let you know who the winners were. There were a bunch of you actually. Okay. Okay. So yeah, there were a bunch of you. Jeez. Hang on. Let me just get one more name. Okay. The winner was Rusty Shackelford, I believe it was. So what we'll do, Rusty, is we'll need to, Vincent will he'll mute your comment, and then we'll go ahead and get your email. So let me make sure it was Rusty Shackelford again. Let me just run through this. Hang on, bear with me, guys. Let me go through it one more time. Okay, hang on. Sorry about this. Just need to get this right. Yes, Rusty Shackelford. You were the first one to win it. Okay, Rusty Shackelford. Okay, and then we had always be funding. Okay, always be funding. Just helping Vincent out here. Always be funding, and then we also had two wheels. Okay, it's the first time we've seen two wheels up on the winning the leaderboard. Two wheels also, and then we had Anamaxa. Okay, Anamaxa also had it right. And going down, let's see. Let's see. It was Eric Harmon. Eric Harmon also had it right. Okay, Eric Harmon. And yeah, always be funding. We had you as well. And then we had sorry guys, a bunch of you got it right here. We had Paul. I believe it was just Paul. Um, let's see. Well, actually, Jan Lee or Yan Lee. You got it right as well. Yan Lee. And we're going to have to cut it off. Sorry, guys. We're going to have to cut it off at, let's see, one more guy here. Hoster of Carcosa. Okay, so Hoster of Carcosa. Let's see, Anamaxa, two wheels, Yan Lee. Always be funding. 1, 2, 3, 4, 5. Okay, those were the five. Okay, so we're gonna stop there. Unless, let's see. Yeah, we'll stop there. If we can, if we do see well, we'll decide as we go on. Sorry about that, but looks like we may stop there with Rusty Shackelford winning Currency Wars, and the rest of the winners are going to win Build Your Own Bank by Aon Schmidt. Again, this it's a really great book, and we're going to be giving those out for another ebook prize as well to the rest of the people who answered correctly after Rusty Shackelford. So for that, I have Rusty Shackelford, Currency Wars, Jan or Yan Lee. I'm not sure which it is. Always be funding Two Wheels, Tuweelz, Anamaxa, Hostel of Carcosa. So that's who we have right now. So we'll work it through, but that's who we have right now. So again, Vincent is going to mute your comment, and that way he can get your email from you. So let me just check with Vincent real quick and make sure everything on that end is squared away. Okay, looks like it is. Okay, that was, I guess a lot of you actually did watch the Rick Rule interview. Thank you for watching it. Rick gave a lot of great info, and we're going to revisit a few things that he said. So again, we'll get through it, figure out the winners, and we'll let you know. Okay. And again, Rusty Shackelford, congratulations! First time I've seen you up on top. So good job, good job. Moving on, let's go ahead and take a look at the gold and silver price from our website. It's been on the move lately. So again, we do take Swiss francs now, so that's a good thing. U.S. dollar wise, we're seeing silver at 25.66. Okay, it's been up and down a little bit, but still holding that mid 25 range. Gold still holding that mid 1900 level, so that's good as well. So both metals are doing very very good. Investor kit, do download this investor kit. It's free. And again, do sign up for a storage account. It doesn't cost anything to do. There's no maintenance fee to hang on to the storage account. It's just one of those things that it's good to have ready to go. You just never know. You know, the world moves pretty quick nowadays, and you just never know when you want to have these things up and ready for you. We talk about it all the time. It's good to have options available. So the investor kit, it's a PDF that'll open up, and you can go ahead and go through it, and do sign up for storage. Again, it doesn't take very long to do, and it's good to have in your back pocket. Another option for you. Gold silver ratio has come down a bit from 79 to 76, as we saw silver make a move. Both metals did make a move. Again, for those that don't know, this is roughly it's just a generalization where it takes 76 ounces of silver to equal 1 ounce of gold price wise. And so what happens is over time, you can see in this chart, the ratio moves. So what this, from time to time, it may mean it may take 100 ounces of silver to equal 1 ounce of gold. Then maybe it may take 50 ounces of silver to own 1 ounce of gold. And if you just look at it that way, if you had that 100 ounces, which equaled 1 ounce of gold, and then let's say the ratio went to 50, now you basically got 2 ounces of gold for that same 100 ounces of silver that you had. And this is one thing guys will do. They'll play the ratio, and in some cases, this is what will help them determine which metal to buy, gold or silver. So this is it's a good thing to look into. And if you have any questions, just let us know. Go ahead and ask us. We'll be more than happy to answer your questions. Moving on to Twitter, I gotta admit, Twitter has been kind of my Twitter feed has changed quite a bit. I don't know. Well, I do know why, but it's changed quite a bit, and I don't really get to see the feeds that I used to see. Not sure why. So it's a bit light. I would have to say it's a bit light. But some things I did find. Exxon announces U.S. job cuts. The global workforce could see a 15% reduction, and this mainly had to do with the bug, with the virus. And again, you got a couple things going on where the oil price is still, a lot of people would consider to be on the low side, and then there's the demand. Uh, with the whole lockdown going on throughout the world, it's not just in one particular country. It's really all throughout the world. So with these lockdowns going on, and some places have opened up, but driving, is significantly less. It's been cut back a lot less. And I do think, as far as oil production goes, I think it was 56% of oil production goes to transportation. So with jets not flying, with cars not really moving as they would, you are seeing a less, more of a lot less demand in things like oil. So, and we're also seeing the lower oil prices, and as a result, Exxon is laying off some people. Let's hope for the best for them. Stacy Herbert, people I care about. This is Max Kaiser's better half. People I care about are melting down, and it's painful to see. So I'm going to step away from social media for a few days or weeks. You can join me on Telegram for non-emotional conversations about Bitcoin, monetary policy, and stuff like that. And yeah, it sometimes you got to take a break. Nothing political here. It's just to say sometimes you do need to take a break. And I remember even with Dr. Mark Faber, he once told me a lot of people that he knows that he deals with, they don't do social media. They're not on Facebook all the time. Maybe once in a while they'll do Twitter, but you don't find um, the very wealthy, per se, as he put it. You don't find them on social media that often, and I think it's something to to consider, something to roll with a bit. Let's not get our lives locked up in social media. There's a great big world out there, and it needs you, and it needs your smile. So let's get out there and make people happy. Daniel DiMartino Booth. Tens of thousands of companies received triple P loans for which they appear to have been ineligible. And this has been going on for quite a while, such as corporations created after the pandemic began. So businesses that exceeded workforce size limits, or those in do not pay databases that owe money to taxpayers. Uh, this is something I've only heard. I never really dug deep into, but yeah, apparently there were a lot of businesses that opened up just to go ahead and collect this this extra funding that were coming into to businesses. So it is something I'm assuming is going to be looked into. But you got to get that money to Main Street. A lot of people, they do need relief out there. So hang on, let me just turn this off real quick. A lot of people do need relief, and it's something we got to be responsible and fair with. So let's hope they get this cleared up. Tavi Costa, one of my favorite guys, he always has nice charts here. Political views aside, here is silver. Last time, political views aside, but he talked about Democrats. Okay. Here is silver. Last time Democrats won a presidential election during a major economic downturn. I know this time is different. It really is. Today, we have a Federal Reserve on a suicide mission, while fiscal deficits are 2 times worse than back then. And so here's a chart he put out where 2008, we know who was president then, and we saw silver start to move, and it's looks like it's going to be doing the same things, considering back then it was billions, and this time it's in the trillions. So silver and gold, they look like they are definitely on the launch pad there, without question. Okay, so let me get to the next article here. Luke Groman. If an American takes out a mortgage in Mexican pesos and the peso falls versus USD, the American ends up ahead. Similarly, since the world borrowed 13 trillion in US dollars, if the US dollar falls sharply, the world will end up ahead. And of course, he's looking at the new president elect. So he's saying the world will end up ahead. So it's quite the opposite there. And this is why sometimes you see guys are taking out mortgages or loans in something other than the US dollar. They understand this. And so something that Luke Groman went and pointed out. Um, let's see, one more thing from Tavi Costa. We won't consider money financed fiscal policy, says Powell. The Fed is already becoming the buyer of last resort of government debt. Foreign investors own the lowest percentage of marketable treasuries in 20 years. this trend appears irreversible, it all points back to gold. So again, he put another chart out, and you can see in red, the top line in red, foreign holdings as a percentage of all marketable treasury securities. On this is end of August in 2020 this year. So you can see how it's going down. Okay, foreign holdings are going down. And the white line here on the bottom, Federal Reserve holdings as a percentage of all marketable treasury securities. You can see this white line going up. So the Fed is buying the treasuries, the securities. Foreigners are not buying as much, and it sure does look like the way his arrows are pointing here. He does he's he's making a point that at some point this thing is going to intersect and go in opposite directions. Uh, Foreigners just simply are not buying as much securities, treasuries as they used to, and the Fed is basically buying it up now. Um, okay, let me just look at a couple more things out here, and let me just look at one last thing, and I'll get back to you guys. But a lot of talk was about the Fed, which we'll take a look at later. Uh, don't sell your gold or silver. I plan to buy more, says Jim Rogers, and Santiago Capital will end with what he says. Despite all the madness, and yes, there's plenty, it's still a beautiful world. Sun's still out, the birds still chirping. Get up in the morning, hug your family, go to work, say hi to your neighbor. I challenge you folks to do this. Say hello to your neighbor and strive to be happy. Say hello to your neighbor and strive to be happy. So those were some pretty calming words there. Nice to see that these things are still out there. Sometimes you got to look a little bit deeper to find them, but they're still out there. Definitely still out there. Okay, taking a look at some of your comments here. Okay, Vincent, are we okay with the book winners? I hope we are. Yeah, two wheels. Okay, great, great. Let's see what else is out here. Um, let's see. Pastor of Carcos. The Fed is a kamikaze pilot. I tell you, it's go for broke. Literally, they are going to go for broke. The Fed. I tell you, it's incredible what these guys are doing. But I guess the one thing we can't forget is really the only tool in their toolbox. And my colleague Vincent, he points this out quite often. And it took me a while to really circle around and understand his point. The only tool that the Fed really has in their toolbox is that printer. That's it. Printer, keyboard, whatever you want to, however you see it. It's the only tool that they have. Every solution they've had to do with printing or some strokes on that keyboard, without question. Okay, let's take a look at a few more comments here. Yeah, I know the election is definitely on a lot of your minds. I mean, it's unavoidable. If you feel you need to go ahead and talk about it with each other out there, it's fine by me. But it's I understand. I think a lot of us understand it's on a lot of people's minds right now. But for me in this seat, I'll try to focus on the shiny stuff for you guys, and and you folks can go ahead and feel the need to talk about whatever you need to or comment whatever you need to. But again, I will say your comments, they are the most important thing right now for people on the fence about deciding if they should get into something like gold and silver. Um, if they're understanding things like systemic uh, corrupt or systemic, I guess a systemic failure at what may be coming up over on the horizon. So they're seeing things like this. So again, your comment is very very helpful to them. So always be a bit mindful for that guy. Help him out if you can, and he'd appreciate that, and I know I'd appreciate that as well. So go ahead, feel free to comment um on whatever you feel you need to get off your chest and talk about. So that was Twitter, and I want to go back and reflect on Rick Rule. So I want to go back and take a look at a couple things that he said. Rick is one of those guys that he's definitely a cut above, and I seriously mean that. Seriously mean that with about Rick. His knowledge and views are captivating. If you ever have a chance to talk to him. It's captivating. At times, you even forget you're there to interview the guy. You get lost in his how he paints a picture. But his knowledge and views are captivating, and I want to go over a few things that he said from last week's interview. Okay, so we'll start with this clip here.
It's worth noting that despite the attractiveness of gold in the current fiscal situation, gold is very, very, very under-owned. In the United States, which is the market I know best, the market share of precious metals and precious metals related investments is about 0.5% of all savings and investment products in the market. In other words, it's an afterthought.
Okay, it's an afterthought. Hang on, let me get one thing here. Vincent, if you're standing by, Theta One has this comment for you. If we could add one more person to get the ebook, I guess is what he's asking. So, if we could communicate with Theta One. So, just wanted to make sure that we saw that. So, yes, we did see it. Okay, so Rick Rule, if you keep this in mind, if you keep it in mind, as many wealthy people tell me, there is a time to make money and a time to protect what you made. I hear this all the time. Are there better investments than gold and silver? Yes. Yes. I'm not going to tell you that there aren't. Are there better investments? Yes. Are there better stores of wealth, stores of value, a hedge against the dollar and a fiat crisis? Not many. And this is the difference when we start to understand gold and silver, what gold and silver do beyond just price. These things start to open up and they unfold in a way that maybe you did not see before. And again, it's more than just the price. It's something we got to keep in mind. And Rick is he's gonna touch on that as well. So here's another. Hang on, one more comment. When it comes down to this, this is an important question. It's a bit odd, but it's an important question. If you have health, home, auto, and other types of insurance, as you see critical, as you see necessary, ask yourself this question: do you have money insurance? Do you have money insurance? And first thought, a lot of people, their head spins a bit, and they're like, "What are you talking about? What is money insurance? What do you mean? Nobody offers money insurance. Never heard of it." Well, money insurance is gold and silver, and that's one thing that a lot of us have come to understand. Um, if you're protecting all of these things in your life, one of the more important things that you could or should also protect is your finances, the health of your wealth, and this is something that gold and silver does. So anyway, moving on. Here's another clip from Rick Rule.
The reasons why we're in this bull market, if you understand the reasons, you'll pay less attention to price and you'll understand more about the dynamics. Traditionally, precious metals investments have done well, as we said before, when there's fear of the efficacy of the purchasing power of underlying currencies and savings instruments. And I'm going to focus on the US dollar and US instruments, both because I live here and also because they're the world standard, whether we like it or not. The first challenge to this faith in the US dollar is quantitative easing. That's a fancy word for counterfeiting. It's the fact that the government does it that makes it legal. If you did it, you'd be in prison. If they do it as policy and it gets you reelected. But there can be no doubt arithmetically that keystroking up new currency units without any expansion in the underlying economy is debasing the currency. That's what it's doing.
Okay, so when you understand why we are in this bull market, you'll pay less attention to price, and you're going to understand that QE is counterfeiting. It is counterfeiting. It's debasing the currency. So I'll leave that for you folks to discuss. Do you agree or disagree with that? I personally agree. I think a lot of us actually do agree with this. If we did it, yeah, we definitely would be in trouble for sure. Uh, but when you understand the reasons why we're in this bull market, a lot of it has to do with QE and the understanding that there's a lot of money being issued and printed, and that does it's equivalent of debasing. let's just say back in the Roman times, a coin was gold, and then they needed more money. They couldn't print more money, so what they do, they started adding in other metals to that money, debasing. So they started adding copper, things like that. In this century, fast forward with this technology, since we're not on any metallic standard and we're only on a fiat paper standard, the equivalent to that debasing is printing more money. It's the equivalent. And a lot of people understand this, and they know that, eventually it is going to lead to a breakdown or inflation, or a breakdown meaning loss of confidence or inflation and things like that. And people just simply are not going to have confidence in the money supply anymore, or what we are being told is money. And again, this is the reason why they will move out of the paper money or currency, fiat, and move into something that is a store of value. So if the currency goes down, they're in something else now, and which will go up. Typically, it'll go up. Currencies go down, gold and silver go up. So this is one strategy guys are looking at, and guys are doing. Take one more look at another clip from Rick Rule.
If the gold price were to go from its current level to some number like $6,000 or $7,000, by the way, something that I don't think is unlikely, uh, for most investors, whence gold has made the move that it needs to make relative to other asset classes. In other words, when gold doesn't need to go up anymore, investors will be attracted to it because the price move will justify the narrative. People won't believe the narrative until it's been demonstrated by price action. That's why bull markets always extend past their rational norms, and bear markets always extend past their rational norms. So paying attention to a market per se, or the pricing levels per se, almost guarantees failure, because you will let the price of an object determine for you its value. And it's an artificial construct. You need to understand the reasons for the move and understand when the reasons cease.
Okay, so we just talked about this. Paying attention to just price almost guarantees failure, according to Rick Rule. And that is a great point. Paying attention to just price almost guarantees failure. You need to understand the reasons for the move and what's going on, let's just say, behind the scenes. So I'd like to know, what are your thoughts on that? And let me go ahead and take a look at a few more comments. Okay, so Theta One, things are cleared up there. That's good. Let's see. Rolf Steiner, the Fed's actions are causing a massive, massive underclass of poor, huddled masses. Now, let me see if I got that right. Yeah, uh, there is definitely a wealth gap growing, and with the Fed interjecting so much money into the markets, we all get the perception that the markets are doing well, which is supposed to lead us to believe that the economy is doing well. But for a lot of people in Main Street, they see a disconnect, and I think even guys on Wall Street right now, if you see a lot of their interviews and comments, they kind of also think that there is a bit of a disconnect going on. So that is true. The Fed, their mandate, maximum employment and price stability. I personally find it contradictory to be able to do the two. The only way you can is if you keep throttling the economy back and forth, back and forth. And when you do that, then you see things like this wealth gap getting wider and wider and and larger. So that's a good comment, what you said there. So I'm looking at those comments. A lot of you guys are talking about the elections. I will put this article up now. trying to stay Trying to stay out of that one. I'm letting you folks go ahead with those conversations. Gold will be a winner no matter who clinches the U.S. election. Not to say we don't care about anything else except money, but this is just an article about how gold should be a winner no matter who clinches the election. So regardless of who wins, the gold market is set to benefit, particularly gold miners. And if you folks been watching miners, they've been having some incredible swings, 10% changes both ways a day. I mean, it's they're they're really on the move without question. Um, let's see. That's because the U.S. will likely adopt a sizable fiscal stimulus program. No matter who is president, this is going to happen. And spot gold rallied above 2000 in August before pulling back to trade around the 1900 level in recent weeks. So let's go ahead and take a look at this article. I think the first 20 seconds or so might be just an advertisement though. So let me kind of close this down a bit so we don't have to hear it. Well, that's okay. Maybe some of you guys like it. But yeah, gold is set to it is gonna be a pretty active asset right now. Guys are definitely going to be moving into gold, moving into silver, because, like I said, no matter who wins, it there is going to be more stimulus.
I think the case for gold is extraordinarily strong, but even more so for gold miners. The case for gold is really predicated, from our perspective, on various factors, not the least of which is that regardless of who wins this election, I certainly have my favorite, and regardless of who the House goes to in the United States, there will be probably one of the most important and dramatic, in fact, I would be able to wager the most important and dramatic fiscal stimulus program in the United States, monetized by the US Fed and monetized by US banks. We will be printing trillions of dollars more, and all of that ultimately has extraordinarily positive repercussions for gold.
Okay, what you're basically saying is the inverse correlation moving in opposite directions between gold and dollar is going to persist. I mean, because of this fiscal stimulus, whether it's more with Biden or slightly less, should we get a Trump second term, it's going to put pressure on the dollar, and that, in classical terms, is very advantageous for gold.
That would be absolutely our view, and I think that the fiscal and monetary policies will be almost identical under either leadership. And I think that the differences that are being delineated are really more imaginative than real, I would expect.
Why miners rather than the physical metal?
Well, here's what people don't seem to understand. We are running out of gold in the world. Last year, we spent 3 times as much capital looking for gold as we had spent 20 years ago. We only found 5% as much gold as we found 20 years ago. And the quality of the gold that we're discovering is much lower. So the fact is we're discovering a lot less gold than we are producing. 10 years from now, if everything goes well for gold miners, we'll be producing 50% less gold than we do today. Production is declining. This has never happened in our communal history as a species before, right? So that's one thing. The second thing is, but there's so little capital being invested in gold miners. We've made it a specialty for the past 5 years. And the little capital that goes into the sector goes in through ETFs. And so the major gold miners, which are the bigger parts of the ETFs, trade at twice the multiples of the smaller companies. And we think that given the same major miners aren't making any discoveries and they're running out of reserves, they're going to have to buy the smaller companies. So what we're doing is we're buying all the wonderful small gold miners with long-term attractive reserves. And as activist investors, we're able to put them up for sale. So we think that very specifically, the case for small and mid-cap gold miners, which admittedly are very difficult to invest into, is as strong as it has been in many, many generations.
Okay, so let's just take a look at a few key points that he mentioned here. Just run through it. He did say a few. Here you go. We are discovering a lot less gold than we are producing. We will be producing 50% less gold than we do today. I think that was one thing that definitely stood out, and I think there was something else here. Yeah, okay. Let's just go with that. There's going to be less gold produced in the future, and that could only mean that. Well, I should say that could only mean, but another reason why let's just say it's something positive for gold, that the gold price should go up and silver price should go up as well. So again, another thing to consider when we talk about gold. So again, it's not just the price. There are other things behind gold. So I want to play a few clips of another gentleman who's here in Singapore, And hopefully we can get him on for an interview one day. But I just want to show you a few things of what he had to say.
I think, if you look at the Fed for the last year, it's been basically in a straitjacket of creating new money flows and basically monetizing all the assets base and trying to create inflation in order to devalue the currency. And I think they will sooner or later succeed on that. And that's going to mean the gold market's going to move significantly higher.
Okay, so again, printing money, keystrokes, debasing currencies, something that's going to push gold, in this case, significantly higher, he says. And again, it's a good point. And, which is why we're going to go ahead and take a look at what the Fed said in a bit. But I want to play a couple more clips from this gentleman here. Again, we can't forget the fundamentals behind what's going on right now. It's not just the price. I know a lot of us, depending, maybe happy to see the price moving the way it is. Maybe we're not happy to see the price moving the way it is. But it's more than just price. There are a lot of things behind gold and silver. What moves them, the meaning, the value of them, the purpose of them. So let me play a few more clips from this gentleman.
Fitch sees 1850 this year, but you obviously think prices will go higher. Whereabouts do you see the price of gold going?
I think if you look at the last few times we had the Fed bailing out the economies, like in 2000 or 2008, you start seeing that actually gold always had a big move. In 2000, it moved from $250 to about $900, and 2008 it moved from $600 to $1,800. So if you think your base today has been around $1,050, you could actually easily see about $3,500.
When would you see $3,500 then?
I think we could see that within the next 18 months quite easily.
Okay, so again, well, price-wise anyway, he's looking at 3,500. I'm not sure if he's talking high or if he's talking a base, but he's looking at 3,500 at some time next year. Next year is not that far away. And again, we see things like what the other gentleman had said about, there's going to be less gold coming in the future. So these things are all adding up to the significance and the importance of gold. So some good points there. Victor Claudio. Gold's purity when dug out is around 92%. It needs to be refined to reach 999 or 49. And that is true. When the gold comes out, it's often mixed with other things, sometimes copper, sometimes silver. Has to be refined. It comes out, the miners, they'll go ahead and put it into doré bars, and then those will usually be shipped or sent over to the refiners. So it's a great point. What you said there is absolutely spot on. It does not come out of the ground pure. Has to be refined. Okay, so two more clips from this gentleman here, and we'll move on.
Longer term, how long will we sit at 3,500? Are we talking about just until the pandemic dies down, or longer term?
I don't think the pandemic has really anything to do with that issue. It's been just clearly indicating that the wealth generation in the system has not really been there already for some time. And it can only be right now replaced with fiscal spending by governments. And as long as that continues, I think the trend will go up and up and up. And I think we're going to be here probably for another 10 years with gold prices rising significantly higher.
Okay, gold prices rising for another 10 years. That's a long bull market. Impossible? No, not at all. I mean, from going back to 2011, 2008, 2009, the crisis back then, 2010, we've seen gold come down for 10 years or not really move much in almost 10 years. So to say, a bull market for 10 years, entirely possible. And again, this all falls in line with what the gentleman before had said about the mining supply. It all falls in line with the way the Fed is printing money. All central banks are printing money. All of these things fall in line. They're all lining up. So again, price is what we see. I guess you could say it's the tip of the spear because it's what we see first. But again, there's a whole lot more things behind it, much more broader things that are behind gold and silver than just the price. One last clip from this gentleman.
What's the best owned gold, physical gold or gold stocks or gold ETFs, do you think?
I think if you really want to have a tail risk management, which is not attached to financial systems, the first thing to own is certainly physical gold outside the banking system. And the second thing is the gold miners, which are probably the next area of investments, which will be attracted by major people due to the fact that they can't invest any different, but as well due to the fact that it's probably the only sector which has really explosion in earnings power. And this explosion of earnings power we've seen already last quarter, and I think this quarter will be even better as the average gold price is achieved by the miners is moving up and up and up.
Gold miners, where specifically? Do you have a favored region like Australia, the United States, South Africa?
Look, I think if you ask people come from the Anglo-Saxon environment, and the only places you should have actually a mine, which is one which is controlled by the Anglo-Saxon financial monopoly we have today. I think there are miners today in other places of the world which are probably as safe and have probably lower valuations. So we don't even mind looking at Russia, which I think is pretty safe place. We like Australia, which certainly has a lot of companies which have incredible free cash flow generation and growth. And I think that's one of the key things people have to look for, growth in the structure. The stocks you have on the list there, all of them have significantly growth, which you showed. The second one here in North America has a bit less growth, but has maybe longer life. So investors will have to look a little bit more in tune what they really want to have. Do we want to have growth or just a sustainable utility performance which benefits from the structure of gold prices?
Okay, so he, excuse me, he said some pretty interesting things, straightforward things. If you're getting in gold and silver, first step, he mentions physical. That should be the first thing to get. Again, none of this is financial advice, professional, otherwise. It's just opinions or for conversation. First thing, his opinion, physical gold, physical silver, outside of the financial system. Okay, so that's the first thing. Second thing he says, he does take a look at the miners. I think it's a natural progression as you move into gold and silver, the way it unfolds. It's another natural progression. But then he also mentions, let's just say the regions, there are risks with the miners, whether it's a political risk, whether it's environmental risk. So he does touch on that. Okay, so let's see. Numi's dad, I'll just go ahead and read this. Thank you for the donation. Thank you very much. I got nothing. Just prepare. There's a family that profited hundreds of millions of dollars from China buying for POTUS. It's. I mean, I think in fairness, maybe it did not get as much play as it should have on mainstream media. I mean, only because coming into election, I feel, we should have as much information as we can. It's just like investing. You want to have as much information as you can. When you're buying things like gold and silver, you want to have as much information as you can. Some information sits well with you. You understand, you like it. Some information, it doesn't sit well. And maybe you're pro gold, and you hear all this talk about Bitcoin. It doesn't sit well with you, but in fairness, you have to take a look at Bitcoin. I mean, it is something that as a straight up, let's just say speculation, guys have done very well, but with gold, we may not be speculating as much, but we understand the fundamentals. It's sound money, things like that. But we haven't got the move as, let's say, Bitcoin has. And so that tends to divide us. You see the gold guys liking only gold. You see the crypto guys liking only crypto. But again, it pays off when you understand two sides. So it's always good to understand two sides, things that you like and things that you don't like. A lot of times, maybe it could be because you don't understand it, or maybe sometimes you just straight up don't care for it that much. But nonetheless, it's good to know two sides. So Numi's dad, it's the point is made. We should get as much information as we can, and we need to look. It's not going to be freely available. We need to look for info. Appreciate that input there. Let's see. Tom Taylor, thank you. Appreciate it. You're a thing conducive to my happiness. Blessing. Okay, Tom Taylor, appreciate the comment. You guys hear me say this all the time. The way things are, even if they weren't, it's always try to be a blessing, not a burden, because we know what's coming on or coming down the road. Um, with all this printing and everything, again, the fundamentals of why people are buying gold and silver, even the fundamentals of why guys are buying crypto. Remember, crypto started after the 2008 crisis. People just, they understood what was going on with currencies, and so an alternative currency was created. And so in this, a lot of us do see what's happening, and you know, still probably more of us don't. Majority of us don't really understand or see what's happening. Not to say we know it all, but just to say that we understand what's going on. And this is where we have to try and be that blessing, not only for ourselves and for our family, but for our friends. We got to try and help them understand and do the things we need to do to position ourselves in a place where we can create opportunities, because these opportunities are going to come to place our families, even our friends, perhaps into a better position when we transition over into a new monetary system. Because make no mistake, we will. It is going to happen. So again, great comment there. Appreciate that comment. Um, okay, so moving on, I want to give you one more view about precious metals, and then we'll move on to some things that the Fed said.
All right, let's get our next guest into the conversation. And he says, don't get too comfortable. The election unknowns will begin to weigh on stocks. Let's bring in Mark Yusko, head of Morgan Creek Capital Management. Mark, welcome back. Good to see you. You're a little bit of great to have you with us. I feel like the substitute teacher tonight, and these guys are behaving very well. It won't take long before they start to misbehave, but be that as it may. Anyhow, you're a little bit more skeptical on where the market may go from here. You think the S&P trade is a little bit dangerous, large cap growth. Explain why.
Yeah, look, I think the math is simple, right? We went down in the 2 weeks leading up to the election, and we've recovered that, which is normal standard fare around elections. The down was a little worse because of the fears of the blue wave. The up is a little more because of short covering. And look, this S&P multiple of earnings today is 35 times. Growth is negative. Global trade is down. Spending wave is not coming. I think there's a lot of reckoning. All of the gain this year is multiple expansion. Earnings are actually down year over year. So I think you need to be very cautious about equities. And look, stocks are up low single digits for the year. Gold has outperformed. My favorite asset, Bitcoin, has trounced stocks this year. International stocks are doing better. The big winner in this election is China and Bitcoin, or big winners, I guess. So I think you need to be taking profits in your equities if you hold them, and diversifying. Long bonds have outperformed stocks this year. Who would have thought that?
I see Steve nodding, but I'd like to get in one question there. I mean, let's stipulate that most of the gain this year in stocks is from multiple expansion. But isn't that a signal that the market thinks the economy is going to be really good next year and that earnings will ultimately catch up with it?
No, not at all. In fact, just the opposite. It's an acknowledgement that interest rates are going to be low for a very long time. And so people are extrapolating those low interest rates, plugging them into dividend discount models, and getting silly numbers. I mean, the problem is the Fed model of valuing stocks based on interest rates breaks down below 2% 10-year. So I just think that's a fallacy. The idea that the economy is going to get better next year, no way. Go to Main Street. There is pain on Main Street around this country like we haven't seen. We've lost 15 million jobs. 15 million jobs have been wiped out and are probably, many of them, not coming back. So the idea that there's going to be a recovery next year, no chance.
Okay, and this is the thing. No chance for recovery next year means more of keeping rates just above negative and more stimulus. It has to. Low rates means more risk taking. We've seen this for decades now. Low interest rates, guys have to take on more risk to get the yield that they're looking for. More households perhaps taking on debt. The low rates, they give us low mortgage or interest rates, and guys will, they'll look at getting a home at a low rate. Can they really afford the home, or did they take on too much home is another question, though. More stimulus means more money printing. More money printing means more, as Rick Rule said, and a lot of us agree, more counterfeiting, more debasement. So more counterfeiting means less willing participants to take on U.S. debt. As we showed you that chart from Tavi Costa, it's going to intersect where foreigners are not buying up U.S. debt and treasuries, and the Fed is having to take over. Less willing participants to take on U.S. debt and looking to get away from a counterfeited world reserve currency. And this is where we are. This is where we are. A lot of it has to do with credibility. And credibility is really, it's everything. And we need to keep that integrity of the credibility. And that is really the ball that's in the Fed's court. So what are they doing? Let's go ahead and take a look at the first clip from Jerome Powell in the most recent FOMC meeting.
Good afternoon. At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Since the beginning of the pandemic, we have taken forceful actions to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. Today, my colleagues on the Federal Open Market Committee and I reaffirmed our commitment to support the economy in this challenging time. Economic activity has continued to recover from its depressed second quarter level. The reopening of the economy led to a rapid rebound in activity, and real GDP rose at an annual rate of 33% in the third quarter. In recent months, however, the pace of improvement has moderated. Household spending on goods, especially durable goods, has been strong and has moved above its pre-pandemic level. In contrast, spending on services remains low, largely due to ongoing weakness in sectors that typically require people to gather closely, including travel and hospitality.
Okay. So, Jerome Powell says Fed's still doing all it can. Economic activity recovering. I think it depends where you are and what you do. Reopening led to rapid rebound in activity. Again, I think it depends where you are and what you do. GDP rose. In fairness, it would have been tough to go down even further, but thankfully it didn't. Household spending on durable goods, strong pre-pandemic level. Okay, guys are getting a bit more relief. They're needing to get necessities against durable goods, so that makes kind of sense. And spending on services remains low. That is true. Service industry has not recovered. It's going to take a while for the service industry to recover. So there are a few soft spots in the service sector, but things are better and getting better is the message that Jerome Powell is giving. Is it? Is it getting better? Let's go ahead and take a look at another clip from Jerome Powell.
The overall rebound in household spending owes in part to federal stimulus payments and expanded unemployment benefits, which provided essential support to many families and individuals. The housing sector has fully recovered from the downturn, supported in part by low mortgage interest rates. Business investment has also picked up. Even so, overall economic activity remains well below its level before the pandemic, and the path ahead remains highly uncertain.
Okay, so Jerome Powell goes on to say a rebound in household spending, in part due to stimulus and expanded unemployment benefits. In other words, government gave people money, gave people relief. He goes on to say housing sector fully recovered thanks to low interest rates, taking on debt. Keep the interest rates low, you're going to attract people to go ahead and buy homes and other things and take on debt, because we all know Jerome Powell wants that inflation. He wants to get above that 2% target rate. He needs that velocity of money. All that money creation is not going to do any good unless people actually get out and spend it. So again, interesting. Low rates are going to start to pull on people to ask themselves, is this the time to to buy a home with these low rates. Um, what else did he say? Business investment picked up. Well, Fed, you guys were throwing a lot of money to businesses, buying corporate debt and whatnot, and basically you're bailing out businesses again by doing things like buying corporate bonds, keeping zombie companies afloat. So, a lot of this is it's painted over. A lot of things that are said are painted over, and we just got to be honest about this again. It's just to say that this is the situation we're in right now, going on with the fiat system, and again, all of these things point to and add up to why guys are going into gold and silver right now. The paint starts to peel, the cracks start to widen, and people see this. People see this. Okay, overall economic activity remains well below pre-bug levels, and the path ahead remains highly uncertain. Well, what was before the pre-bug level? We saw the repo market break, right? We saw that repo market break. And this was something we saw back in 2007, 2008. We saw the repo market starting to crack and break a bit. And so it's the same thing. Same things are being played out again. It's just a different year. That's it. Things repeat or rhyme, and it's singing the same song right now. So gladly this is a lot of things that you out there understand. Markets do not like uncertainty, yet markets continue to go up. How is this possible? Why? Because the certainty markets know and have is that the Fed has unlimited funny money to give them. And that's what the world sees is funny money, which is why they're not buying the US debt and the Fed is having to buy it. The only tool the Fed has left is that printing press, is the keyboard, that golden keyboard that can give a few strokes and create money out of thin air. Okay, so moving on. Something else Jerome Powell said. And yes, I did notice he's trying to hold back that cough because that purple tie, lavender tie, and that cough and clearing throat, it's starting to look like some tails there. So another clip from Jerome Powell.
In the labor market, roughly half of the 22 million jobs that were lost in March and April have been regained, as many people were able to return to work. As with overall economic activity, the pace of improvement in the labor market has moderated. The unemployment rate declined over the past 5 months, but remained elevated at 7.9% as of September. Although we welcome this progress, we will not lose sight of the millions of Americans who remain out of work. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, the high level of joblessness has been especially severe for lower-wage workers in the services sector, for women, and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. The pandemic has also left a significant imprint on inflation. Following large declines in the spring, consumer prices picked up over the summer, in part reflecting a rise in durable goods prices. However, for those sectors that have been most affected by the pandemic, prices remain particularly soft. Overall, on a 12-month basis, inflation remains below our 2% longer-run objective.
Oh man, Jerome, there's that cough again. You gotta let it out. You can't keep all that stuff in you. You can't keep it all in you. You gotta let it out. Here we go again. Get it out, Jerome. So he says half of the 22 million jobs lost were regained. Where? What sectors? What's the pay? Again, you can make any number look good if you want to. Unemployment went down, currently at 7.9%. If you talk to other people, you're still hearing unemployment is well above 10%. That downturn not equal. It's, I guess, that part, it's hard to comment on that. I really don't, I haven't broken down the numbers to see what he's really talking about and looking at there. Many lives upended and the future is uncertain. That's true. But the thing is, they had a role to play in it. Inflation creep He's talking about that 2% again, but a lot of you folks have already said inflation is really moving in. It's more than 2% in a lot of places throughout the country, throughout the world, even. And inflation below their 2% objective. And then he started to cough. Maybe that tie was a bit too tight, as some of you folks had mentioned. Um, Clearing up the throat and that coughing, we know what that means, right? You got to wonder, hey, is this guy, is he telling us the truth, or is he just trying to paint some kind of a narrative here for the Fed and for other central banks throughout the world? Okay, other things, economic dislocation. Could it be the Fed's own intervention? Their own intervention causing the economic dislocation between Wall Street and Main Street. We touch on this all the time. That wealth gap is just going to get wider and wider with what the Fed is doing. So, a lot of things you got to really question what is coming out of the Fed, what is coming out from the central bank, and just we got to look. You sure with your left ear listen to what they're saying, but with your right ear maybe take in different viewpoints, and then with your mind try and decide what's really right out there. Another clip from Jerome Powell. I just have 3 more clips.
In addition, over coming months, we will continue to increase our holdings of Treasury securities and agency mortgage-backed securities, at least at the current pace. These asset purchases are intended to sustain smooth market functioning and help foster accommodative financial conditions, thereby supporting the flow of credit to households and businesses. At this meeting, my colleagues and I discussed our asset purchases and the role they are playing in supporting the recovery. At the current pace, our holdings of securities are rising at a substantial rate of $120 billion per month, $80 billion per month of treasuries, and $40 billion per month of agency MBS. We believe these purchases, along with the very large purchases made to preserve financial stability in the depths of the crisis, have materially eased financial conditions and are providing substantial support to the economy.
Okay, so Jerome Powell continues to say they're continuing to buy treasuries and agency mortgage-backed securities, at least at the current pace. Again, treasuries. We'll go back to guys just aren't buying U.S. debt much anymore. So yes, they are having to buy treasuries, at least at the current pace, meaning may not go lower, it may go higher. That's the way I read it, but everyone has their own opinion. The purpose is to retain smooth market functioning. Markets still need help. Trillions and trillions of dollars later, the market still needs help. Sometimes we talk about this, and he's going for broke. That printing press, it's going to be going full speed ahead. The bearings are going to start smoking. The wheels are going to come off. It's going to break down, and where will we be at that point? Trillions of dollars later, and still needs help to retain smooth market functioning. Help foster accommodative financial conditions. In other words, businesses, don't worry, we're still going to bail you out. We are going to put money in your sectors. Again, just to say, this is where we are, and this is why we need to understand where we are and start to position ourselves in something else, other financial instruments outside of the banking system, outside of the monetary system. I mean, you see where it's going already. We all can clearly see where things are going. Buying up at least $120 billion per month, quite a bit, and basically the Fed is supporting the economy at this point. Fed is supporting the economy. So it seems to me, just said the Fed is the economy. They will continue to pick the winners. They're going to continue to pick the losers. They are the borrower, the lender, and the buyer of last resort, well outside of their mandate at this point. Here's another clip from Paul. 2 more clips. Here's one.
Looking ahead, we will continue to monitor developments and assess how our ongoing asset purchases can best support our maximum employment and price stability objectives, as well as market functioning and financial stability. The Federal Reserve has also been taking broad and forceful actions to more directly support the flow of credit in the economy for households, for businesses large and small, and for state and local governments. Preserving the flow of credit is essential for mitigating damage to the economy and promoting a robust recovery. Many of our programs rely on emergency lending powers that require the support of the Treasury Department and are available only in very unusual circumstances, such as those we find ourselves in today. These programs serve as a backstop to key credit markets and have helped to restore the flow of credit from private lenders through normal channels. We have deployed these lending powers to an unprecedented extent, enabled in large part by financial backing and support from Congress and the Treasury. When the time comes, after the crisis has passed, we will put these emergency tools back in the toolbox.
Okay, so I always like it when he says lending powers. You know, it's almost like there's some superhero, and next time we go to the theater and we watch some Marvel release, we're going to see Jerome Powell on it with his lending powers standing next to Thor or something like that. Anyway, Jerome Powell says asset purchases to support maximum employment and price stability. Fed mandate. That is the Fed mandate. Okay, let's be clear on that. Maximum employment, price stability. That's their mandate. Support market function and stability. That's not their mandate. When did that become their mandate? If they're going to support market function and market stability, that means they're getting involved in the markets. Far overreach from their mandates of price stability. It's price stability, not market stability. So price stability and maximum employment. So Fed overreaching there a bit, and something that Daniel DiMartino Booth touched on in that tweet. Keep credit flowing to all. More printing. Okay, more printing, more keystrokes. No credit flow will damage the economy and hurt a more robust recovery. Again, trillions and trillions were already given, and they can't stop. They have to continue. The Fed cannot act alone. Treasury Department must help. Again, in other words, they can print all this money, but it has to get to Main Street. They're definitely getting into Wall Street, but that money has to get to Main Street. And again, when that money gets to Main Street and people feel confident, let's say they're getting more PPP, they're getting it more frequently or whatever it is, when they get more confident, they're going to spend. And when they spend, the Fed is going to get that inflation that they want. So, keep that in mind. They want that inflation, and they are going to keep dangling that carrot out there in order to get that inflation. Can they close that Pandora Powell toolbox? We've discussed this before. The punch bowl could not be taken away from Wall Street. It's not going to be able to be taken away from Main Street unless something comes along like infrastructure type jobs to get people back to work, which infrastructure type jobs, usually they're 5 years, 10 years, and guys will feel comfortable that they have some job security, that their pay is good. It's basically a government funded job. Then they will surely spend. And that inflation will surely come. But then that'll be a whole nother Pandora's box that is going to open up. So can Jerome Powell close that box? Not sure. One more clip, Jerome Powell.
As I've emphasized before, these are lending powers, not spending powers. The Fed cannot grant money to particular beneficiaries. We can only create programs or facilities with broad-based eligibility to make loans to solvent entities with the expectation that the loans will be repaid. Many borrowers are benefiting from these programs, as is the overall economy. But for many others, getting a loan that may be difficult to repay may not be the answer. In these cases, direct fiscal support may be needed. Elected officials have the power to tax and spend and to make decisions about where we as a society should direct our collective resources. The fiscal policy actions that have been taken thus far have made a critical difference to families, businesses, and communities across the country. Even so, the current economic downturn is the most severe in our lifetimes. It will take a while to get back to the levels of economic activity and employment that prevailed at the beginning of this year. And it may take continued support from both monetary and fiscal policy to achieve that.
Okay, Brad Newell, how you doing? Give you your shout out there. How you doing, my friend? So the Fed needs collateral to give loans. We know this. We've gone over this before as well. They can't just simply give the money, print the money. There needs to be a legislation for it. And we are in part that collateral via taxes. So the Fed can't print. I mean, it's loans, and they need collateral for that loans. And I think the simple truth is this: you and I, all of us here, are collateral because we have to pay taxes, and that's the collateral for a lot of these loans, maybe at least in part. So knowing this, you can bet your bottom dollar, your last dollar perhaps, that the government will be reaching into your pocket. More taxes, higher taxes, more debt on the way. There's no way out. Again, another thing, this is another reason why people look at gold and silver. These things are going to be coming. Make no mistake, they will be coming along with inflation. Um, I want to touch on one thing as well. Paul Volcker, he was interviewed. This was decades ago, and what he touched on about the Fed was the Fed needs confidence, or the Fed has to have confidence. They need confidence, basically. There's another word I'm searching for, but I'll go ahead and play this clip. It's about 2-3 minutes, so just kind of stick with it because Volcker says something pretty interesting in the end.
Let me start with your experience at the Treasury Department in the early 1970s. President Nixon suspended gold convertibility in 1971, and that led to the collapse of the Bretton Woods arrangement. I have 3 questions about that. First, what was your view at the time of the desirability of that policy? Second, what is your view in retrospect? Did the United States have any choice? And finally, how much do you think that action contributed to the sharp rise in inflation in the remainder of the decade?
Okay, I just want to touch on this. So this interview, maybe I'll shorten it up a bit. He basically, Volcker was interviewed by I think Friedman was his name, and in the end, what it came down to was Volcker said, yeah, the government needed to be more responsible. It was something that they were never held to account to. Going back to the reasons why they went off the gold standard, they just simply were not responsible. And of course, we know we went off the gold standard and money was printed. But what he had to say, the gist of it was, let me just throw up this part in the end here. The Fed could have devalued, but basically, per Paul Volcker, sorry, a bit out of context, but bear with me. The Fed had no credibility. Okay, the Fed could not do much at that time because they had no credibility. And this is where we're headed, where the Fed, all central banks basically are losing their credibility. It's if there's no credibility in the banks, central banks, it means there's no credibility in the money, right? What they want us to use as money, we're not going to have we're not going to believe in it anymore. No confidence in it. And along with that comes the governments that the money comes from. If you have no confidence in the European Central Bank, you're not going to have confidence in the euro. You're not going to have confidence in countries wanting you to use that euro. It's the same with US. It's the same with any country. So it leads to a bit of a breakdown. And in that, how do you think your paper assets are going to do? When that fiat system breaks down, because people simply lose confidence, because they lose credibility. And there's a lot of credibility being questioned all over the world in just about everything. How are your paper assets going to do? Once these things again come into play, you're loaded up in paper assets. You're loaded up in cash. All of these other paper types of instruments. This is where again you may want to start looking to move some of your paper assets into hard liquid assets. Things again like physical gold, physical silver. It's different for everyone for sure, but still, nonetheless, we're all headed to that same point. There is going to be a change in the monetary system. So with that, I'll throw up a few comments. Excuse me there. I wanted to share that piece, but it might have been a bit too long. But a few comments here. For all these reasons and more, this is why you own gold and silver. Money is being debased. It's being counterfeited. Money is being thrown all over the place. There is but there is no real valuations on companies, no real production, consumption, and many jobs will not come back. They're simply not going to come back. And the money from the Fed, it's a loan. It is a loan. Make no mistake. You heard it clearly from Jerome Powell. It's a loan, and it's going to need to be paid back. Again, this is where gold and silver, the stores of value, become a hedge against all the chicanery of government. Chicanery is a nice word. Sure. Take a look at the price of precious metals, of course, but don't let that be the only the most weighted thing that or reason for you to be buying precious metals or to not be buying precious metals. Don't let price be the only thing. And again, having said that, one of you folks said it earlier. I'm going to play it again. This clip from Dave Drummond from Georgetown Trust. It just might be time for some of you out there to explore the reasons to vault your precious metals or to store precious metals outside of your home jurisdiction and in a more, let's just say, peaceful, stable, or more favorable jurisdiction. So, one more time, this clip from Dave Drummond.
I believe, like many people, gold and silver are stores of wealth. They could also be an investment instrument, but if you don't look at them like an investment instrument, if you look at them as stores of wealth, you'll note that they hold them very well. And then where have the stores of wealth typically been put? They've been put in areas where there's low risk or smaller risk of those countries being invaded and the gold being taken. So do I think it's wise? Yes, I think it's wise to have some gold and silver within hands reach, some gold and silver within cars reach, and then some gold and silver within no one's reach, right? With that, I believe that there are places then to store your gold and silver. Looking for places like you guys have that capability. Look for those companies that have that ability and use it. Same type of thing, right? Redundancy.
Redundancy, same type of thing. And when you talk to a lot of these financial advisors, they often tell you diversify, get this, get that, diversify your portfolio. The other thing they tell you, or they may not tell you, is a bunch of them will also say diversify the location of your assets. That's equally as important. You want to diversify location of your assets. It may be something that a lot of us don't think about, but it is another good. It's another good strategy to consider. Diversify the location of your assets, and again, I will never argue with someone who says if you don't own it, you don't hold it. Keep it all with you. You know, you're never going to hear me argue that point. But I am going to say, for others out there who may be in a different in a different situation, a different set of circumstances, uh, you will absolutely want to consider moving your precious metals overseas, or at least out of your jurisdiction in a more favorable jurisdiction. So, there's no right or no wrong in this case. It's just that we're all in different situations, and so we need different options. We all need different options. So, having said that, let me take a look at a few of your comments here. Sorry, I cut short that Volcker interview, but basically it was all about confidence and credibility. And again, this is something that the Fed is going to have to. Uh, I'll say it. I think they're going to have to understand. I mean, it's got to be hard for Powell to come out there, each time he does, knowing that that credibility is just a bunch of red candles now, just going down, 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 down. So let's see. Um. Okay. Let me see what else is out here. Some comments. Um. Okay. Sorry, I'm just scrolling through some comments, seeing what you guys are saying. If I can pull some up before I head out here. Um. Okay. Seems like you. Okay. Seems like you guys are okay. You guys have been leaving some good comments, some gold and silver comments, some political comments, some Federal Reserve comments. You know, you guys, I salute you. You folks really understand what's going on. Glad this can be a sort of a meeting place for you folks where we can talk about these things, we can stay informed about things, and then again for new guys, and for guys who are on the fence about getting gold and silver, they see your comments and it matters. It matters to them. So appreciate you you guys commenting there. I mean, so with that, I think everything looks okay here. I do wish you guys all the best. You have a great week ahead. A lot of uncertainty still coming down the road, and again, this is where we want to have something. Again, things like gold and silver, where we do have some certainty, where we can all sleep a little bit better at night, knowing that we have real sound money at our side, at our disposal. Manuel de Jesus, I think that about sums it up right there. Fiat is good until it's not. And this is something we talked about. My opinion, a lot of people's opinion, fiat currencies do have an expiration date. Definitely do have an expiration date. You don't want to be holding it when it expires. So flip it over into something that will go up when fiat goes down, something that will store the value of your wealth when fiat simply doesn't. So having said all that, let's all do our best, be a blessing, not a burden. We're going to have to help people out there, help ourselves, help people out there as well. See you guys next week. And as always, saddle up for what's coming ahead and silver up as well. I'll see you folks. Take care.